Hello, ladies and gentlemen. I'm Joseph Novichkov, Senior Trading Manager with GDM. Asian markets today were mixed on Thursday after seesawing following soft Chinese trade data. Mainland Chinese markets were shrugging off some of the figures, showing steeper than expected declines in China's dollar-denominated exports in September, and of course, an unexpected drop in imports as well. The Shanghai Composite was slightly higher, just above the 0.1%, while the Shenzhen Composite gained about 0.3% after briefly slipping into negative territory. Hong Kong's Hang Seng Index remained under pressure and was down about 1.27%. As of course in Japan, the benchmark over there, the index Nikkei 225 closed down 0.4% or about 65.70 points at 1674.24, most likely on the back of Chinese trade data and stronger yen as well. As we're talking about it, the yen strengthened against the dollar, trading at 103.80 compared to levels above 104 earlier. European stocks were lower in the morning trade after minutes from the US Federal Reserve's September meeting raised expectations of a December interest rate hike, and weak China data also weighed on the investors' sentiment. Tracking the Pan-European Stock 600 index was down about 1.1% as the dollar pulled back from a 2.5-month high against the yen on Thursday after surprisingly weak Chinese data. So that, of course, stirred fresh concerns about the world's second largest economy. Also, against a basket of major currencies, the US dollar index last stood at 97.868, having pulled back from a 7-month high of 98.13 set earlier on Thursday. The dollar has been supported so far by growing market expectations that the US Federal Reserve could actually raise interest rates in December, and of course the rising US bond yields. Tracking the the exchange rate of the euro versus the dollar, it was slightly higher, 0.2%, 1.1024, getting some pull up by after sliding to 1.1 on Thursday. That was its lowest level since July. Sterling also fell again 0.2% down to 1.2138 on Wednesday. Gold prices in the commodity sector are little changed as they pair gains on the plunging Chinese trade data that stoked concerns about the health of the world's number 2 economy. The climb in bullion came despite signals from the US Federal Reserve minutes that the central bank could actually raise interest rates in December. As we're tracking the price, spot was up 0.5% at 1260.40 an ounce in late Asian trade, as of course that was its best gain in 3 weeks. Oil prices in the energy sector fell on Thursday after OPEC said its production had risen to the highest level in at least 8 years from now, and following reports of an increase in US crude stockpiles. US West Texas Intermediate crude futures were down about 50 cents or about 1% at $49.50 per barrel, as the American Petroleum Institute, a trade group, reported on Wednesday that U.S. crude inventories rose by 2.7 million barrels to 407.9 million barrels in the week that ended October 7. This would be the first rise in oil stocks following 5 straight weeks of declines. As of course, the Energy Information Administration is due to publish the official storage inventory data later on Thursday. More information and interesting things on the calendar. The initial jobless claims coming out on 12:30, along with the continuing jobless claims. Also, import and export prices, all of that for US. And of course, 14:30, Energy Information Administration's crude oil stockpiles report. That's all from me for now. Stay tuned. I'll see you next time. Bye-bye.